Happy 4th of July! While fireworks light up the sky, there's a different kind of explosion happening in the world of crypto, and it's sending shockwaves through the market. Bitcoin, the king of digital assets, is suddenly tumbling. But this isn't your typical correction. The sell-off feels off, even to seasoned investors. Rumors are running wild. Did Satoshi Nakamoto, the legendary and anonymous creator of Bitcoin, just move a $10 billion fortune? Meanwhile, whispers of Ethereum's silent comeback are starting to get louder. What's really going on behind the scenes? Today, we're peeling back the curtain on these dramatic moves, exposing the facts, and revealing why this could be one of those rare windows that only come along a few times per decade, a true buying opportunity for those who understand the game. If you want to stay ahead of the pack, you're in the right place. Let's start by looking at the heart of the storm, the sharp and sudden Bitcoin sell-off. Prices have dropped noticeably, and many traders are calling out the move as unnatural. Whenever a market reacts this sharply, especially around a holiday when trading volumes are thin and emotions run high, it's a sign to dig deeper. Why did this happen? The answer lies in the rumors that started swirling early this morning. According to social media and some sensational headlines, Satoshi Nakamoto himself, the mysterious figure who invented Bitcoin, might have just woken up from digital hibernation to move a wallet containing nearly $10 billion worth of BTC. For years, the crypto community has watched these so-called Satoshi wallets, wallets created before Bitcoin was even on most people's radar, like a hawk. The fear is that if the original creator sells, it could crash the market or signal the end of Bitcoin's first era. But here's the thing. Most people don't have access to the kind of real-time on-chain data that tells the whole truth. The reality is rarely as simple as the rumors make it seem. And that's exactly why we're here, to bring clarity in a sea of confusion. Early today, a massive event unfolded. 4 legacy Bitcoin wallets, which had been completely dormant since 2011, suddenly sprang to life. To understand why this matters, let's put it in context. These wallets together held a staggering 80,000 BTC, which, even after the recent price drop, is worth nearly $9 billion. Back in 2011, when these wallets were last active, Bitcoin was trading for less than $5. This means the holder has seen their investment multiply by more than 20,000 times. The first wallet transferred an eye-watering 20,000 BTC, worth about $3.2 billion at today's prices. Not long after, another wallet moved 10,000 BTC. For those tracking the blockchain, it looked like a sleeping giant from Bitcoin's earliest days had finally awakened. But there's another twist. On-chain analysis, the forensic detective work of the cryptocurrency world, linked these wallets to legacy addresses that once sent Bitcoin to Mt. Gox, the infamous exchange that collapsed in 2014. Mt. Gox was the central hub for Bitcoin trading in the early days, and almost every major player had some interaction with it. This connection was the first clue that there might be more to the story than meets the eye. And then, panic set in. All across social media, headlines, and trading forums, people started speculating. Is this Satoshi coming back to dump his coins? After all, Satoshi's wallets are also from the 2010 to 2011 era, and nobody knows for sure who controls them. For a brief moment, the fear was palpable. If Satoshi sold, what would that mean for the future of Bitcoin? Would the original creator abandon his invention? Would investors lose faith? The uncertainty was enough to send prices tumbling as traders rushed to sell before a possible avalanche. But here's where facts separate from fear. The best on-chain analysts quickly dove into the blockchain data, tracking past movements, wallet linkages, and transaction patterns. Their verdict? There's a 99% chance that these revived wallets don't belong to Satoshi at all. Instead, they point directly to Roger Ver, a name every early Bitcoiner knows well. Roger Ver, sometimes called Bitcoin Jesus, was one of the earliest and most vocal evangelists for Bitcoin. He invested millions into the project, supported infrastructure, and even ran businesses that accepted Bitcoin long before it was cool. Ver had deep ties to Mt. Gox and was a major player in the ecosystem during those formative years. He's known for his large holdings, his willingness to make bold moves, and his role in splitting off Bitcoin Cash. The evidence is overwhelming. Wallet signatures, transaction histories, and associations with other known Ver positions all line up, and this changes everything. If these dormant wallets belong to Roger Ver, not Satoshi, the narrative is no longer about the anonymous creator abandoning ship. It's about an early investor making portfolio moves, perhaps for personal reasons, business needs, or even to diversify. The existential fear that Bitcoin's God is leaving evaporates. But the market isn't always rational, especially in the heat of the moment. The news of these wallet movements triggered a wave of panic selling. Traders who didn't have the full story dumped their coins, fearing a flood of new supply and a collapse in price. But as every experienced investor knows, these are the moments when fortunes are made, not lost. Why? Because market overreactions create opportunity. When everyone is running for the exits based on rumors or faulty assumptions, those who keep a cool head and focus on fundamentals can buy assets at a discount. And with several major catalysts on the horizon, the setup for a potential rebound is compelling. For example, the U.S. House of Representatives is about to declare July 14th, 18th as Crypto Week, with a focus on pro-crypto bills like the Clarity Act, the Genius Act, and the Anti-CBDC Surveillance Act. These pieces of legislation could create new clarity and protections for digital assets, opening the door for even more institutional investment. While all eyes are on Bitcoin's turbulence, Ethereum is quietly getting stronger behind the scenes. It's not grabbing the headlines, but the signals are impossible to ignore. Consider Circle, the company behind USDC, the second largest stablecoin in the world. Circle just went public, launching their IPO at $31 per share. In less than 2 weeks, the stock has rocketed to $242, a staggering gain that has Wall Street and Silicon Valley buzzing. Why does this matter for Ethereum? Simple. Circle's USDC stablecoin runs on Ethereum. In fact, the vast majority of stablecoins, whether USDC, USDT, or others, use Ethereum's blockchain as their foundation. As stablecoins continue to expand, providing the backbone for payments, DeFi, and even cross-border remittances, Ethereum becomes more and more critical to the entire ecosystem. Beyond stablecoins, Ethereum is the infrastructure for decentralized finance, non-fungible tokens, and the emerging world of Web3 applications. Every dollar that flows into this space strengthens Ethereum's position as the foundational layer of the new internet. But Ethereum isn't the only platform getting attention. In the world of altcoins and DeFi, Solana is stepping further into the spotlight. Just this week, DeFi Development Corp made headlines by purchasing $2.7 million worth of Solana as part of its treasury strategy. The news sent their stock up 17% in a single session, a testament to the market's appetite for exposure to Solana's rapid transaction speeds and growing DeFi ecosystem. Solana's integration into the 1-inch decentralized exchange aggregator is another sign that institutions are taking DeFi seriously. While Solana's price dipped 3.6% to around $146. These developments are setting the stage for a potential resurgence. The altcoin market is still in its early innings, and the combination of institutional adoption, technical innovation, and new use cases could drive explosive growth in the coming months. So where does this all leave us? If you're worried that you've missed the boat on crypto, think again. The numbers tell a different story. Right now, more than 95% of the world's investors have zero exposure to Bitcoin. Let that sink in. Adoption of Bitcoin wallets today looks almost identical to internet adoption in 1996. And we all know what happened next. An explosion of growth, innovation, and wealth creation that changed the world forever. Blockchain's importance goes well beyond price charts. In a world where deepfakes, AI-generated voice clones, and digital disinformation are making it harder than ever to know what's real, Bitcoin and Ethereum offer something radical: provable trust. Their blockchains are transparent, auditable, and immune to manipulation. That's why we're seeing major US corporations and banks quietly accumulating Bitcoin, not just for speculation, but as a long-term store of value and even as collateral for future financial products. Let's recap what we've learned today. A dormant whale from 2011 just moved 80,000 BTC after 14 years of silence. The market initially panicked, thinking it was Satoshi Nakamoto, the original creator of Bitcoin. But on-chain evidence overwhelmingly points to Roger Ver, an early investor and major player, not Satoshi. This takes the existential risk off the table and reframes the entire episode as a strategic move by a legacy holder. The panic selling that followed was based on misinformation and uncertainty, not fundamentals. For those who understand the crypto landscape, these moments of fear often present the best buying opportunities. Meanwhile, Ethereum is quietly gaining strength as stablecoins like USDC become more integral to the global financial system. Solana and other altcoins are also seeing renewed interest from institutions, setting the stage for another DeFi surge. If you believe in the long-term promise of blockchain technology, this is your moment. The world is still early in its adoption of digital assets, and the biggest gains may still be ahead. So, ask yourself, do you think this whale was Satoshi or Roger Ver? Are you taking this window to buy Bitcoin, Ethereum, or Solana? The next few weeks are packed with major events and potential catalysts, and we'll be covering every twist and turn, every single day, holiday or not. If you haven't already, hit that subscribe button, give us a like, and share your thoughts in the comments below. Stay tuned for tomorrow's update, because in crypto, every day is a new adventure.